As the final video in this financial assessment Walk the Walk with You series, this video is designed to help you prepare for the interview with your potential client. When you work with your client, education is the key. With financial assessment in place, it will be more important than ever to see your role both as an educator and a consultant. As a reverse mortgage professional, you must be proficient and knowledgeable on the reverse mortgage industry. Know the details of the product, the industry, financial assessment, and the uses of the product. Complete the Walk the Walk with You training series, and stay up to date with new policies, regulations, industry updates, and trends. Note that all HECM lenders must adhere to the financial assessment. The underwriting for all HECM files will be based on it. A few tips for your interview include: it is critical to get to know your client and put their priorities first. You must understand the specifics of your prospect's goals, problems, and opportunities. The only way to do this is to ask meaningful questions and then listen to the answers and include them in the documents you submit. Set realistic expectations and timelines. Be as organized as possible when you ask for information. Have a list of questions to ask each prospect up front. Use a financial assessment worksheet every time. Provide a list for your clients to make sure they have everything ready. Use a list for yourself and make sure you don't forget anything. Be as thorough and complete as possible up front. Be meticulous when completing the information, and involve trusted advisors and loved ones in the process whenever appropriate. Always have some potential questions in mind to ask during your interview. Questions such as: do you file an income tax return with the IRS? Are you required to? Or are you currently employed? Or what are your monthly obligations? And finally, have you ever been late making your mortgage payment in the last 24 months? As an assistance, we have created the first Reverse Mortgage USA HECM Financial Assessment Sample Interview Worksheet. This worksheet is thought-provoking and will assist you in the development of your interview. See the download section on this video landing page for more information. A complete financial analysis of each HECM borrower is a condition of HECM approval. HECM borrowers verify and document the following: credit history and property charge payments, income and assets, expenses, and residual income. Residual income requires the borrower's authorization to verify the information we need to perform the financial assessment. This includes a non-borrowing spouse or other non-borrowing household members' authorization whenever necessary. The financial assessment process includes documenting and verifying credit, income, assets, and property charges, analyzing credit history and property, charge payment history, and calculating cash flow and residual income, and finally evaluating extenuating circumstances and compensating factors as needed. Although these new requirements are more extensive than past requirements, they will ultimately serve to protect countless reverse mortgage borrowers from default, as well as further contribute to the making of federally insured HECM one of the nation's safest loan products. Documentation areas include the following: income verification, credit history documentation, asset verification, property charge verification, residual income analysis, documentation of extenuating circumstances or compensating factors, calculations for life expectancy set-asides, and residual income shortfall set-asides. There are only two basic income requirements. First, current income that is likely to continue for at least 3 years, and second, past income and 2 years employment history. Effective income is considered legally derived and properly reported on the borrower's tax returns. Start off with a basic acceptable income documentation, such as Social Security and/or pension, and determine if the borrower will meet the willingness and capacity test based on their residual income table. As for income basic documentation tips, first, current receipt of income, such as a 30-day pay stub including year-to-date earnings, and secondly, a history of income, the prior 2 years W-2, 1099, or 1098. Complete tax returns for prior 2 years with a signed 4506T may be required and provide easiest way to document several types of income such as rental, interest, dividend, annuity, etc. Download the first Reverse Mortgage USA Income Matrix to assist with documentation. The lender is to establish the borrower's willingness as demonstrated on a tri-merged or RMCR report, as defined by HUD, to meet their financial obligations in a timely manner, including property charges. Credit scores are not required. The following will be reviewed to establish the borrower having an acceptable history of meeting their obligations: mortgage debt, installment loans, revolving account, 30-day accounts, and public records, including judgments, collections, bankruptcy, foreclosures, and tax liens. Credit and property charges. Lenders must establish a 24-month satisfactory history of all property taxes, showing no arrearage or delinquency. All listed property charges are required by a 24-month history except for insurance. These include property tax, special assessments, homeowners association fees such as condo or PUD fees, and ground rents. Homeowners and flood insurance require a 12-month history to support no lapse of coverage. Property charges are defined as real estate property tax, homeowners insurance, flood insurance if applicable, homeowners association fees, condo or PUD fees, ground rents, and special assessments. Download the First Reverse Mortgage USA Credit Matrix tool to assist with documentation. Extenuating circumstances. When is an extenuating circumstance required to be documented? If a borrower has had difficulty paying monthly obligations that caused late payments to be reflected on their credit report, including property charges related to mortgage, homeowners insurance, or association dues, etc. What is considered an extenuating circumstance? An event out of the borrower's control that had an isolated impact on their credit, such as loss of income, loss of spouse, or major medical event. When do we need to establish compensating factors? It is applied to borrowers that meet willingness but lack capacity, where residual income is insufficient based on the table established by HUD based on family size and region after evaluation of monthly cash flow. The borrower has acceptable credit and no property charge delinquencies over the past 24 months. Examples of compensating factors include monthly distribution of income from HECM proceeds, or additional regular income from an NBS or other non-borrowing household member, or co-signed debt paid by another party, or documented reserve assets. If your borrower doesn't meet the residual income requirements and has an acceptable credit but no known compensating factors, they may be a candidate for a partially funded life expectancy set-aside, also known as a LISA, determined by underwriting. A fully funded life expectancy set-aside may be an option for a borrower that does not meet willingness acceptable credit guidelines for financial assessment. A partially funded life expectancy set-aside would be available if the borrower has acceptable credit, established willingness, but lacked the capacity to meet their obligations. In addition to the documents you usually collect from a reverse mortgage borrower, you may need to collect the following: recent pay stubs covering a 30-day period if borrower is employed, most recent Social Security and/or disability awards letter when using as their primary income, W-2s and/or 1099s for the previous 2 years to support employment history. Any additional income documentation, such as tax returns, may be required if using a rental investment, interest dividend, annuity income sources. Bank statements from the previous 2 months, all pages, if using for funds to close, reserve, or Social Security and pension income. Most recent statement from any retirement investment accounts to support additional assets for reserves being used for a compensating factor. Refer to the First Reverse Mortgage USA HECM Financial Assessment Interview Worksheet. In the Financial Assessment Walk the Walk with You series, we have developed a number of tools for your use. Go to the download section of this video landing page and you will find a Credit Matrix tool, an Income Matrix tool, a HECM Financial Assessment Worksheet, a Sample Interview Worksheet, and a HECM Financial Assessment and Property Charge Guide. If you have any further questions, refer to our FAQ located on our website or send your scenario questions to underwriting@firstrmusa.com. Thank you.